Well, good morning, everybody. My name is Glenn Roberts, and I am the director of the U.S. Department of Commerce's office here in Fresno, California. And I work for the International Trade Administration in the Department of Commerce. And so our service territory is essentially Central California. And we help companies export. So today's series is the second part of a four-part series. Today we're going to cover finance. So can we get our slides up and we'll start the presentation. So hopefully we can share some good information with you and also to learn. Today we're going to go fast. Start slide number one, please.
This one?
No,
Oh.
slide number one. That's good. So today we got a lot of information to put out there today. And what we need to do is kind of go through it as best as we can. I have my contact information at the end. And of course, the Blue Tech Valley will go ahead and make it available for you online as they have the other webinars. And so I look forward to getting through this. A lot of information, but the reason why I've put so much information in there is because I think the most commonly asked question that I get when counseling clients one-on-one is how they get paid or how they can mitigate some of the financial risks that are out there for you, because essentially there's a lot of scary things that happen around the globe, but working with the clients here in Central California and around the globe, or around the country, I should say, we've been able to really help them grow and mitigate those financial risks. So we have two parts today. We have export finance terms, and then we have some strategies. So I want to kind of get to the strategies, and the terms that we're going to talk about are prepaid and or advanced payment, open account, letters of credits, collections, and then Incoterms. And Incoterms, we're going to talk about Incoterms on the way through because that could be quite a bit of time in of itself. But we're going to go ahead and sprinkle the Incoterms in as we progress through the presentation. So we want to start off with one of the first payment terms that we're going to discuss are prepaid, or maybe get money in advance. And it's great for our U.S. companies to get paid in advance before they ship product or before they even build it. However, sometimes the cost of fronting that money for the buyer severely limits the amount of the overall sales, because they have to lay out that money. And if they're borrowing that money to lay out to buy your goods, then they're going to be paying a higher interest rate for a term, and they have a big risk knowing that maybe you're not going to be able to ship on time, and that causes them further delays and costs them more money for their money that they're borrowing. So even though it's good for us, anytime we can get money in advance, let's take it. However, let's find out other ways through the presentation here how we can maybe help our buyer buy more. Okay, now on the opposite end of the scale, the buyer would like to have open account terms, but that's risky to the export. And what happens if the buyer doesn't pay you when the goods arrive? Maybe they delay or prolong that payment. And what happens along the way? The ports go on strike, or maybe there's a changeover in the government, a coup, or maybe they dissolve the parliament because of lack of confidence in the parliament. So all these different factors can come into effect, but at the same time, this is what the buyers would like, but then again, that puts all that risk back on us. And so most of our clients do not like having that kind of risk. So then we have letters of credit. Now, letters of credits are an instrument that's been around for a long, long time. It's decades, centuries it's been around. And it's a guarantee from the bank, the seller's bank, that the drafts will be honored. And then here's that little itty-bitty word, but with a big meaning, if the terms and conditions of the credit are met by the seller. Now, I can tell you that having an expertise in letters of credits, that if part and those terms and conditions, my gosh, guys, they actually go down to if you got every period in the right spot, every comma in the right spot. And this can make it very frustrating. It's a different tax. However, if you comply, it is honored. And it's something that they can't change their mind. there's no way. If they have an irrevocable confirmed letter of credit, and you comply with those terms, you will get paid no matter what. So I do like a letter of credit. Unfortunately, it costs a little bit more money to utilize this type of transaction. So the bank charges are a little bit more expensive. So today I'd like to talk to you about the letter of credit. It's one of the most complicated international instruments for financial transactions. However, it's one of the most secure. And since I do have an expertise in letters of credits, I have been able and very successful over the years in getting pretty much everybody paid. In fact, everybody did get paid. I did have one delay with a particular bank, but we eventually resolved it with the bank, and the customer got paid. So this is one of the most secure things. If you're going to do a one-off type of transaction, or you don't know the customer, probably the best way of transacting is with a letter of credit to get paid. All right. So in this particular case, the buyer and seller come to an agreement. The buyer then sends an application to the buyer's bank. Now notice that the first thing happens here is that the buyer's bank gets involved. Right? The buyer's bank will then open the letter of credit and send it over to your bank. And your bank will then issue you an advice that a letter of credit has been opened up in your benefit. Right? So you're the beneficiary on the letter of credit. So you now take the letter of credit. You have about, there are 3 trigger dates. One is when the date of the letter of credit is opened. The next one is the last shipping date. And the last date to be concerned about is when the letter of credit expires. Again, it's part of those terms and conditions that we have to comply with. So we get our goods on down to the shipping company. And now you take the shipping document plus all your other documents, which will minimally include a commercial invoice, a packing list, and a certificate of origin. So hopefully the goods are made here, right, guys? And now you're going to submit those documents to your bank. The bank then gives those documents a review to see if you're complying with the terms and conditions. If everything passes, and then the seller, your bank, then will transfer the documents over to the buyer's bank. Right? And they get a review of the documents as well. But between the bank to banks, it's very rare that the two disagree with something. But it has happened. However, it's pretty good. Now, this is the beauty of the program. Before the buyer's bank releases the documents, they actually get the money from your buyer. All right. So now the money from your buyer is out of their hands, and it's in the financial institution system. So it's SWIFT. I'm sure most of you have heard of SWIFT payments. This is now through SWIFT. So once they give the money to the buyer's bank, now the bank will release the documents. The buyer now can clear the goods from customs in their country. In this case, it was, we're going to use Thailand. And now the money rolls back to your bank. And then now your bank will pay you, remit the payments to you. Minus bank fees, of course. Imagine that. Anyhow, this is one of the most complicated. I find most companies steer away from this, and those that do it on their own or go at it alone generally make mistakes which delays payment. So I have found out over my career, when I see a letter of credit, it's money in the bank. I really have a lot of confidence, 99% confidence that we are going to get paid. And with all these different types of transactions going on, that's great. Unfortunately, this is also one of the most expensive ways to transact a financial agreement between a buyer and a seller internationally. It's just expensive, but it's well worth it, and you should quote those fees and when you're sending a quote over to your potential buyer. If they want a letter of credit, great. Most of them don't. You can insist upon it. It's a very fair way. It minimizes the risk for you. It minimizes the risk for the buyer. So when you guys can't agree on prepaid or open account, this may be the one thing in the middle that you guys can work with and take place. Now, collections are another form, and a lot of our commodities that leave the Central California, they like to utilize this collection process, and mainly they use documents against payment. So again, once they get through doing their agreement and the goods are getting shipped, documents go to your bank sends them on over to the buyer's bank, and then the buyer's bank will not release the documents until the buyer pays. Now, it's not guaranteed. If for any reasons they change their mind, you're stuck. But if you have a good client, a good relationship, this is a way to save some money and make things just a little bit easier. But eventually, for them to get the goods to clear customs, they're going to have to pay the bank. So eventually you will get your money. But things can happen and things change. And I have seen it over my career that people will not get paid. But it is really good for relationships that have been established for quite some time to save a lot of money. All right, so moving on. One of the things that we like to talk about are some of the strategies. And the first one we want to talk about is the Export-Import Bank of the U.S.'s Credit Insurance Program. So in the industry, we call it EXIM Bank, and you might hear it referred to as EXIM Bank as well. So now you can be issued a policy from EXIM Bank that will cover your open account invoices. And remember, we talked about open account. That's mighty risky for you. But now you have protection and insurance program that can cover that invoice, that open account, for like 95% of that invoice value, guaranteed by the U.S. government that if anything goes wrong, the seller's not good enough, and or the country may have some problems, you guys still get to collect 95%, and it makes life a lot easier. Okay, so they have a couple of different programs, and since each and every one of you have a different type of business and different business models, I've just put them up there real quick. All this stuff is found on their website, exim.gov. But the Express Insurance is one of the first ones that I get you to slide into, so hopefully you can increase sales. All right. Now think about this: if you utilize their programs, they actually feature a free credit report on the foreign buyer. Now they're not going to cover your receivables without doing their due diligence, so they're part of the due diligence to make sure that you're dealing with a credible buyer. And if you are, then they easily extend this credit insurance policy to you, and you'll be able to move forward. So that's a fast one that happens. If you have your first export client overseas, and it's going to be shipping to them and exporting to them on a regular basis, then you can get a single buyer insurance policy, and it's insured against non-payment by the international buyer, and again covers bankruptcy, political risks, and inconvertibility of currencies. Sometimes that has happened over the life of my career. And so this is, I think, one of the great programs to use. And again, that's just for like one buyer that you're setting up. Now, let's say you work with the U.S. Commercial Service in our office, and we start opening up other global markets, then you might want to go into a multi-buyer insurance policy. And essentially, it's the same thing, but it's for multiple buyers for your company. Now, they don't all have to be related to the same company. They could be anywhere just about in the world. The EXIM Bank has a country list on their website that'll let you know what countries they cover. And if they cover that country and you want to add it on there, that's great. Another thing, too, is that you don't pay for the insurance coverage until after it's shipped. So this kind of maybe helps you out managing your cash flow for your business as well. Okay. Now, some people still feel a little uneasy with letters of credits, and we went over that, a little complicated, and we went through it kind of fast. However, if you really want to make sure that you're going to get paid on that letter of credit, they actually have a policy too that will cover the letter of credit and also help you if you have an insurance policy on your letter of credit. The banks will work with you, if your bank will work with you, to help you procure the raw materials that are necessary to fulfill that order. So that's kind of a nice thing to have and as you try to expand your business through exports. Okay, the medium-term export credit insurance policy is essentially utilized for bigger items, and it takes a little bit longer to pay back. So essentially up to 5 years, you'll have this policy on bigger transactions. So it's a big ticket item. You're offering payment terms of 5 years, sometimes 7, based upon like renewable energy, environmental type of technologies. They can extend themselves up to 7 years longer. And this will help your buyer procure your goods. So this is another one that they offer. And now we're going to talk about PreExport Finance. So there are cases where you may need to obtain some funding to fulfill those orders. And so I've worked with the SBA office, the Small Business Administration, and they have 3 different programs for exporting. Now, and here they listed up here, the Export Express loan up to $500,000. It's a 2-page application, makes it kind of easy. And then your working capital loan, that's what it is, it's a working capital. And also your international trade loans. So if you're looking to maybe restructure some debt, refinancing at the time, or procure some fixed assets, another production line to help you fulfill those orders a little bit quicker, these loans are available. Now, the good thing is that not like the traditional SBA loans of up to like 70 to 75% guaranteed to your bank. The international loans and the export loans from SBA will give your bank a 90% guarantee. Unfortunately, I find working here in Central California that not all bankers are familiar with this program. So if you go to your bank and you want to talk to them about it and they give you the deer in the headlights kind of stare, give us a call. We'll get you in touch with the SBA office, and also we can have the SBA talk to your bank and go through it. And so hopefully they'll be able to extend that program to you. All right. So we've already covered letters of credits. We've covered credit insurance. We've got the pre-export financing. What about post-export financing? What can we do there? Accounts receivables. You start racking up a large accounts receivables. If you're going to use those receivables as part of the equity for like a loan, most banks domestically will not cover your foreign receivables. So if you do have your insurance on your receivables, then this allows the accounts to be insured, and so now the banks can essentially factor, if you need that type of service, they can factor those foreign account receivables up to a significant percentage, and hopefully that will help you out and help you with your borrowing needs and all that good stuff. All right. I'm just trying to get to this part here, the quoting strategies. I think this is one of the most important parts as we learn to go after global business, is that we have a good strategy going in. Of course, the tools that were being presented here today are something that we can utilize, and we can come back and fortify all the details that are necessary, because there's a lot of details involved, but you're not going at it alone. We are here to help. SBA, Ex-Im Bank, our agency, we're all here to make sure you guys follow those pitfalls. And so one of the strategies I like to use is quoting. And when we quote our customers, I think we should be quoting them in a way that we are offering them a couple of different prices, because I never want to be able to give up cash in advance. I think that's the securest way. And then, but we do want to be able to say, okay, it may not be their taste, so let's offer them a couple other options. And this is where we're going to go through. So I got a little bit of a worksheet here, and I hope you can follow along. But let's say we're going to ship from Fresno. We got an order going to Bangkok, and it's worth $20,000. Okay. So let's say the packaging costs about $150. Our shipping department gave us that quotation, and so now we have another $150. Inland freight to get it to the port. And this is the part where we're going to start talking about the Incoterms. Okay, so as we get to that port, let's say it's going to cost us $200 to move our goods down to the port. International Logistics Company gave us that quote, and we add $200. So now you have $20,350. And down here at the bottom, very bottom, it says FOB. We're going to fill that blank in a little later. FOB in the international world, which is unlike FOB in the domestic world, because in the domestic world, it's freight on point. However, in international shipping, it's free on board. And free means free of damage and free of any liens. So if you're exporting vehicles, vessels, aircraft, anything to that nature, they want to make sure that there are no liens on that equipment or vehicle before you export it. So that's the important part about free on board. All right. So the total again is $20,350 to the Long Beach port of exports. And now we're going to do ocean freight. We got under ocean freight there, we see we have 750. And again, quoted by the International Logistics Company that you work. I do recommend insurance. Down there, insurance is 55 cents per $100. So based upon the figures here, we have a premium of $127.65. So total shipping cost for $877.65. Okay. Now, the beautiful thing about international world of business is that this is one of the few times that you can actually gain more insurance, an extra 10%. So we're going to take the $21,000 and times it by 110%, and then that gives us $23,210. We're going to multiply it by 55 cents per every $100 in value, and then we get our cost of $127.65. Now, if anything goes wrong at that point when you're shipping over there, you're going to end up be able to submit a claim for 100% of your losses plus 10%. That extra 10% is for the time it takes to file the claim. So it could take 4 to 6 months, and then that 10% is supposed to cover your monies that are laid out there, and you haven't done anything with it. Okay. So now the total cost to ship your $20,000 worth of goods, plus your inland freight, plus your packaging, plus your ocean freight, plus your cargo, now gives us another Incoterm called CIF, standing for the cost of your goods, insurance, premium, and your freight costs, okay, to Bangkok. So the total cost of Bangkok for cash is $21,227.65. Okay. So FOB, we put it down here on our worksheet for $20,350, and our CIF costs are $21,227.65. Okay, but now we're going to go back and use some of those strategies we just learned, and we're going to add in some direct bank charges plus some terms. Maybe we'll give them 60-day terms if they're going to do it, and the discount rates to get your money back out from the bank as soon as possible. So there's little costs involved with that. Again, you'll work with the banks, but now they can offer that, the two different prices. So you can just move that. So let's say the finance charges are going to be in the bank to factory will be a total of $340. We'll put that there. Okay, and then so now you're looking at 4 different numbers, okay, to offer your client. And I think this is one of the best strategies that we can move towards. And if I get you into the habit of doing this, you're probably going to pick up some extra sales. So if they buy in cash in advance at the port of Los Angeles or Long Beach in this particular case, then they're going to pay you $20,350 in advance. Great. But let's say they'd like to have some terms up to 60 days. You need to buy that credit insurance policy, so they're already paying for it themselves. And it's in the $340. And they want it shipped all the way to the port in Bangkok. Well, then now the total cost is $21,567.65, which includes all those additional costs. You can imagine being offered 2 or 3, 4 different pricing based upon what they like, what they can afford to do. If they want to save, it looks like maybe $240 some odd dollars, and they can just save that money by paying you up front, great. But if it's only going to cost them $200 some odd dollars to get the credit terms, that's a good deal for them. And again, meanwhile, you can get your money out right away. It's $340 includes that factoring discount from the bank. And also you have all the credit insurance on there, so you can work with the post financing if necessary. And this is a beautiful way of offering to the clients, your customers, and your buyers an opportunity and a choice to make. So we can get to this point here. It's been the hardest thing for me to get across. We're doing it in a very short amount of time, and I know it may sound a little confusing, but I hope this little exercise today kind of helped out. Okay, so now after you get your worksheet up, you present the different prices. You put it in a format that we call a pro forma invoice. And that's very important for us because most buyers internationally have to obtain an import permit license to bring in the goods. And they need the pro forma invoice, which is basically going to look like your commercial invoice when you go to ship. And that way the two documents match up, but now they have a document they can submit to their government authorities to get that license to import your goods. It all starts with a pro forma invoice. And then after you ship, it's going to be retitled commercial invoice. And we'll need the commercial invoice plus other documents. We'll make that another topic maybe later on in a couple of months, and we'll talk about that soon. But in this particular case, this is what it takes to get the import permits and get the licenses ready. And then they'll let you know when they're ready to ship. Okay. So I also want to let you know about some grant funds. Yes, there are some grant funds that you can obtain. And the state of California, because we're all in California, we have 39 of those counties here in California that you folks represent. So we want to make sure that you guys get a piece of the pie. So under the STEP program, which is the State Trade Exporting Program, which is funded partially by the Small Business Administration, they have up to, I think this fiscal year, up to $18 million to work with, okay? And you can use this money to pay for your costs and travel. You can use this money to pay for costs to exhibit at a booth. Or what we talked about on our first webinar, part 1, about the services of a gold key, where we can get you those pre-screened and vetted companies to the table for you. And it costs about $950 for small companies, just about any part of the world. You can use the grant funds to pay for that service. So that's one way of expanding your services and also promoting your products around the globe. So please, if you need any information, we do have somebody here in Fresno that administers that program, and that is with the Center for International Trade Development, the CITD. Her name is Alicia Rio. So we'll be able to get you in touch with her at any time, and hopefully this will kind of work out to your benefit. All right. So over the year, we've assisted, last year we assisted like 326 companies in Central California, and with great success, we've been able to help people collect their monies overseas. And I can tell you we're not a collection agency, but there is a little bit of clout when the U.S. government or the U.S. embassy calls up your buyer and says, hey, when are you going to pay? Or do you have any information so we can relay back to them? You'd be surprised how many times that shakes the money out of the tree for us. So please kind of keep that in mind. It's something that we want to avoid because we have all the other products here we talked about today. And so I think that kind of concludes what we're talking about today. And here are the contact numbers to get a hold of us here in Fresno. All right. And I'll be glad to take any questions as they come. All right. Thank you so much.